to Legally Speaking with me, Tarun Nangia. The Central Board of Direct Taxes, headed by Chairman Nitin Gupta, has, under the revised guidelines issued by them, have issued guidelines for compounding of certain offences under the Income Tax Act. This decision is aimed at facilitating ease of doing business and also decriminalizing certain violations. This is also done so that you want to push investment in India, you have to make laws easier. Offences have to be made compoundable. For example, Section 276. More details will be given by the eminent panelists who have joined us today on the program. May I welcome S. Ravi, founder of Ravi Rajan and Company. Good to see you again, and looking forward to some very interesting insights from you on this. I have with me Rakesh Nangia, chairman of Nangia Anderson. Good to see you again, Mr. Nangia. Last time you joined us from London. This time I hear you're back in Delhi, and looking forward to some interesting interventions. We have a new panelist who joins us on Legally Speaking for the first time. He is Advocate Anil Harish. He's partner with DM Harish and Company. This is a Bombay-based firm, Mumbai-based firm, and he focuses on tax, property, and FEMA. Good to see you, Mr. Harish, Anil Harish, and looking forward to some interesting insights from your end. At the outset, let me go across to Mr. S. Ravi for his opening comment on this decision taken by CBDT Chairman Nitin Gupta, and also welcoming that a lot of fast changes have started coming since he has taken over, which means action times are there in the Income Tax Property Department with the taxpayer in mind. Over to you, Mr. Ravi.
So, first of all, thank you, Tarun, for inviting me to this show. I vividly remember in the last show, we had stated that Mr. Nitin Gupta had made a statement that he will look towards taxpayers as stakeholders. And I think he's kept that promise straight in a very short time. And this guideline is one more step towards actually ease of doing business. And the biggest thing here is this circular gives a lot of granular details on how to approach the whole subject. Because what was the basic problem was, how do you distinguish between a technical error and a willful person who does a willful evasion of tax? And I think this circular more or less articulates that. And also, whenever there were little ambiguities on the procedure, the timelines have been so clearly outlined that I think both from the assessing officer's point of view and the tax department and also the SSE, there will be a clarity on how to go about it. And the third point is the decriminalization, which was very important, and actually a very clear decision again made by actually putting the schedule of offenses into A and B. And that really clarifies the whole position. So this is a great step. And we did talk about last time that there has to be a clarity with the department and also with the assessment that is being done and in the tax space. And I think this is a very good step. It's a welcome step.
Thank you. Thank you for your opening comment. I'll go to Mr. Rakesh Nangia, Chairman of Nangia Anderson, for his opening comment on this decision taken by CBDT Chairman Nitin Gupta.
Thank you, Tarun. So let me just take the genesis of it. Very interesting facts and figures. The total number of prosecutions that were in 1920 were 1,100 actually. And when you launch the prosecution, there's no one is a winner. The government doesn't get the taxes. Proceedings goes on for years and years. And at times, even the general technical default gets into the prosecution racket. So this whole process have actually revamped the entire process. I'll give you a few examples. They've scrapped, there was a collegium of 3 officers. And they used to decide certain actions in those meetings. It has been scrapped. The reason for scrapping was this: there was never used to be a collegium sitting down together for months and months and months. So the entire discretion, which has been taken away by this entire new process of compounding, and everybody is a winner. The government gets a higher compounding fee. It acts as a deterrent. It makes it ease of doing businesses there. And on technical default, a person need not necessarily be prosecuted, and then he pays a fee, so he is also out of that. And a very interesting part is there's something like a complete cap on the compounding fee, which was never there earlier, actually. So you say the timings of payment, like Mr. Ravi mentioned it, a clear timeline has been a discretion, not a discretion has been taken away, and time has been extended at every level possible to make it ease of in the whole process of compounding process is concerned. So in my opinion, there's a winner of government, the SSE wins. It gives it's a good, positive intent of the government to make it an ease of there. And I think honestly, in a view, it was very, I can say, people at times for technical default used to get harassed. It goes away, basically. It's a very remarkable step in the entire income tax section where they have dealt with this thing at a single blow. It was very badly needed.
Thank you. Thank you for that opening comment, Mr. Nangia. I'll go across to Mr. Naveen Harish from DM Harish and Company for his opening comment on this decision.
Tax, interest, penalty, and prosecution have been the weapons in the hands of the Income Tax Department. At one point of time, there was even a quota given to commissioners of income tax that they had to launch a certain number of prosecutions in a month. Accordingly, they used to do that, and quite often for very small sums. But once a prosecution began, it had so many implications that the person was under stress, it would affect his business, the courts got more clogged, the person could not even travel quite often. And we used to find that the compounding fees were so very high, because especially if they were time-based, they would just run on and on and on, and would quite often exceed the full amount of tax that was involved. The Income Tax Department has been issuing show cause notices whenever they want to initiate a prosecution, and then people respond to those. But there also the experience has not been very satisfactory from the point of view of assessees, because even though they set out all their facts, the Income Tax Department, the commissioners, or the persons responsible do not really want to take the decision to stop the prosecution, and they just allow it to go on in the ordinary course. And therefore, the cases are filed. Now, one point that has been mentioned in the press release dated 17th September, which covers this circular of 16th September, is in conformity with the government's policy of facilitating ease of doing business and decriminalization of offenses. I would just like to point out here that this circular is not for decriminalization. Decriminalization means that an offense is not such an offense as would invite criminal proceedings. This is one which invites criminal proceedings, and yet you want criminal proceedings to come to an end. So I would just like to point out that this is not a decriminalization. That would be by statutory amendment, by changing some of the provisions of law.
Okay, thank you for that opening comment. Before going to Mr. S. Ravi, I would like to share this with my viewers that the Finance Ministry statement mentions that the scope of the eligibility of compounding of IT cases has been relaxed, where an applicant who was convicted with imprisonment of less than 2 years, which was previously non-compoundable, has now been made compoundable. The discretion available with the authority has been restricted. So basically what they're saying, up to 2 years where you could spend time in jail, if it is up to 2 years, you can pay a fine and be, in a sense, let off. And this has taken to promote ease of doing business and also reduce the compliance burden. Now, this line, ease of doing business and reducing the compliance burden is what we've been hearing now for years. And the government is moving in that direction. Now, my all three panelists are eminent chartered accountants, and Mr. Anil Harish is a lawyer. You would have had certain experiences with clients getting prosecuted in certain cases where you feel that these offenses would better off have been made compoundable so that we don't drive away investment. And, to psych a big promoter ensures that he won't invest money in India more. So what has to be done? Some suggestions also, if they could come, they are welcome. I'll go to Mr. S. Ravi for his suggestions and also the impact of this decision, both actually.
So the impact is straightforward. Actually, the procedures have made it very clear to the assessment officers too that there is a time limit for everything. Like they have prescribed a time limit of 6 months where they have to dispose of the application.
Yes.
Not only the taxes, but also to the assessing officers or the tax authorities. So that is a very good thing, because I strongly believe the way communication has been established. it is, Mr. Rakesh Nangia very clearly said, it takes years to get settled. So what happens is there is a definitive timeline for everything. The second point that I want to make is very clear, that basically this circular means that you pay, if you have done a mistake, pay the money. You are going to be responsible. You pay the money and you're off the hook. And then also this circular also talks of even or technical errors also. There is a time limit. It's not that there is a freedom for doing that. If there are 3 technical errors in multiple applications, if more than that, then there is a discretion available with the tax authorities. So what is happening is within this also, they have tried to club in with people who are willfully defaulting and those who have made technical errors and those who have continuously tried to make technical errors. So this is a clear distinction that has happened. And this is a great thing because the ambiguity that was persisting between all this was the root cause of all the problems.
Thanks for that input, Mr. Ravi. Also, by this notification and this communication from the Finance Ministry, the time limit for acceptance of compounding applications has been increased from 24 months to 36 months, thereby ensuring that in a sense, the people who have been in a sense prosecuted have more time to, get out of the case by paying a compounding fee. Now, Section 276 for my viewers deals with removal, concealment, or transfer or delivery of property to thwart tax recovery. So the tax department said that if a person has failed to discharge his tax liability, then the tax authority can recover the dues from him by attaching movable, immovable properties. If the taxpayer then fraudulently removes, conceals, transfers, or delivers to any person, any property, or in any interest therein, intending thereby to prevent the property or interest therein from being attached for recovery of tax, then prosecution proceedings under Section 276 can be initiated. Mr. Nangia, with this decision, do you think that investor confidence has been built that they can pay a compounding fee? And if you have any more suggestions for the tax department on what they should do in future so that we continue to attract the investment in this country?
So first, what you mentioned about 276 is correct, but the good part is this. Now, this 276 offense has been made compoundable. Now, this is another very important thing. Earlier, these are all subject to prosecution. And when you say it's compoundable, you can tolerate or bear a financial loss, but you cannot afford you going to the court and run the risk of being prosecuted and arrested and going behind the bars. It's not one thing. I tell you another 3-4 important sections where the government has put up an upper cap. Earlier what happens if you don't used to file a return or you don't need to, or after notice, you don't reply to that, there was a risk of prosecution. So the government has done away all these prosecution clauses. If there's any willful attempt to evade the taxes, there's an upper cap. The compounding fee cannot exceed beyond the tax amount is concerned. So there's an upper cap is there. If there's a tedious default, now your compounding cannot exceed, failure to pay the tax cannot exceed the tedious amount. Now, these are very radical and important changes that have come in the interest of the business is concerned. Another interesting part, only offenses which are non-compoundable are there, which comes under the Black Money Act, or which comes under the Search and Seizures, or come under the Benami Act. So government is very clear. These are serious act of commissions, and we are not going to accept it, or we are not going to tolerate it. Very well accepted it. I give you another interesting matter. The rate of interest, which earlier used to go to 2 to 3%, has been brought down to 2% if there was a delay in payment of the compounding charges are there. Very reasonable. 3% rate of interest is actually very, very high. Extension of time of payment of the compounding charges have been really, government has exceeded from 6 to 12 months. Even beyond 12 months, it has been provided in the law. Yes, government can consider on a case-to-case basis extension of time for the payment is concerned. Now, you talk about the suggestion basically. I think the more important part is the mandatory part is clearly defined. Search, Seizure, Black Money Act, Benami Act. this is limited. Rest, more or less, you can say, majority of the offenses which falls under the act technical, which are in the nature of omission, all are done away, all have become a financial burden, and not you go through the rigors of prosecution is concerned. I think our suggestions could be very limited at this time, but it's a very beautiful, radical confidence building for the global business community.
And business is also happy because of a recent Supreme Court judgment which said that Benami Act can't be applied retrospectively. So
Yes.
two good news for the investors, one from the Supreme Court, the other from the CBDT chairman, Nitin Gupta. So I'll go to Advocate Anil Harish from DM Harish and company. Mr. Anil Harish, if you could expound on what the other two panelists have just said from the legal standpoint, because primarily you also argue in court of law. Will it reduce the number of cases? How many cases were these? And what generally happens? You also declog the courts with unnecessary litigation. Could you give us a legal perspective of what our two esteemed panelists have shared with us?
Yes, sure. I would like to also elaborate on what Mr. Nangia said. Para 8 of the guidelines of 16 September refer to offences not to be compounded, as he mentioned rightly, that these are cases of search and seizure under Section 132 of the Income Tax Act. Then Para 8.1 goes on to say offences not normally to be compounded. So you have Para 8, which says these offences under Section 32 cannot be compounded at all. And then Para 8.1 says offences which should not normally be compounded. That means they can be compounded, but not normally. And those are the ones which relate to black money and to Benami Act, etc. And there are several others. Now, this is a distinction that has been made. In a way, it's better than what has happened in the voluntary disclosure schemes, etc., which have been there in the past few years, because then they had put an absolute ban on making declarations of certain kinds. Here they have said these are not normally to be compounded. That means they can be compounded in exceptional circumstances. Actually, I think that these should all be compoundable because there's no reason why not. After all, if the government wants to declog the courts and wants to be able to take a fair or an equitable or a generous view towards those who have offended in the past for whatever reason, then why should one say that this offense is compoundable and that offense is not compoundable? I'll give you an example. There was a person who had come to us. He had set up a company outside India, and he had set up the company. The paid-up capital of the company was $1. Maybe he spent $2,000, $3,000, $4,000 to set up the company, but he had gone abroad on a trip and he had some exchange with himself. Someone suggested open a company in the BVI. So he set up the company with $1. He never operated the company. He didn't even open a bank account. He didn't do any business in that company. There was no diversion of income. But they found out this because of the Panama Papers and other things. So the government sent a notice to him and he explained, yes, I did open this company. I have not acted on it. Yes, I did use that $1 or $3,000 or whatever from out of the exchange I was carrying. But I actually forgot about it and I therefore did not declare it in Schedule FA of my income tax return. What was the government's view? Prosecution. So the prosecution is going on against him and his brother, who are the shareholders of the company, for this $1 company. And penalties have been levied. Now, we've succeeded in some of those penalties. 1 or 2 are still pending. Those we will continue to fight. The prosecution has been stayed by the High Court. So the matter went first to the Magistrates Court. Then it went up to the High Court under Section 482 of the Criminal Procedure Code. It's been stayed. You can see how much tension for them and how much loss of time and expense for the government and for them. But this is something that has just been happening at all. So I see no reason why situations like this should be treated as abnormal. Everyone forgets. The government also makes mistakes. It's not that government makes no mistakes at all. The government itself has superseded the circular of June 2019. That means they consider a change necessary. So they must recognize that every human makes mistakes.
So I want to ask you this, Mr. Anil Harish, that a lot of business community asks, can we mediate and settle in case of, do you see the scope of mediation to settle with the tax department? If the amount is large and do you see?
I suppose it's possible in theory, but I don't actually see it happening very much. Maybe it used to be there in the old days when figures perhaps were smaller, when maybe commissioners felt that they had more administrative powers. But today, with so many controls, so many levels of officialdom, and so much media glare, which is important in many ways, but yet it's something that everyone is not comfortable with. So I don't really see it happening, because then it shows that a person has taken a decision, and if it goes in favor of an assessee, then fingers get pointed against the commissioner. So I can quite understand the position of the Income Tax Department or of the CBDT if they were to give a favor in mediation. So they preferred to let the matter go through the courts or through a specified administrative procedure like the guidelines set out here.
Okay, thanks for that input. Now, we almost to the end of the program, so we'll take to our final round of comments. First, of course, to thank the CBDT chairman and the CBDT for taking one more step, which to make this country a tax-friendly destination. This is a long journey. Nothing can be achieved in a day, but if we are forward-thinking bureaucracy, then of course it helps. We'll begin a round of closing comments very quickly. May I go to Mr. S. Ravi, founder of Ravi Rajan and Company, for his closing comment.
So this circular, as we have all deliberated and spoken about, is a very good circular. But I think there are areas, for example, the time-bound assessments, appeals, just people are not even aware what is the status of the appeal, especially in the faceless regime. So people should be aware. And what is very important, and I still maintain that while we do appeals also, if there are 5-6 issues, at least what are easily settleable, what can be settled, we should settle it. And that is where there can be a technical difference between the two views. I think it is imperative that these steps in the other form of assessment, like we have a very granular guideline here, giving details, we should have it in the other segment also, especially in the appeals. Because there are disputes, there are appeals, and that is where time value for money and also it's assessment for the tax too, and the department is over. So I think this is another thing that I would suggest it's a personal suggestion that I would like to make.
Thank you for that input. I'll go to Mr. Rakesh Nangia for his closing comment.
And one thing here, the SSE has been given power to sue once he commits an offense and he realizes it. Under the new guidelines, he can sue motor goals and file as compounding. This is one thing. And there's a lot of extension have been given from 12 to 24 months to 36 months, which was not there anywhere. Let me tell you, Tarun, the intent. Government has been talking about regionalization of all the laws of the country is concerned. And for Income Tax Act, it was a very, very serious deterrent. And people like us, when we go to the tax office and realize the challenge you go through the whole process, it was extremely deterrent, worrisome, bothering. What happens if prosecution proceedings are there, repute of the business, all issues are very badly getting affected. The government has practically taken over in majority of the cases. Where there was a prosecution proceeding is gone. It has been converted into the monetary deterrent. And this monetary deterrent is tolerable, acceptable and everything. It will make you ensure that you don't do in future. The government gets the money, government gets the taxes, the SSE doesn't get a threat is there. So it's a win-win situation, a very big, remarkable change, I can tell you that, in the entire ecosystem of the tax. Basically, the most important amendment I've seen in the recent part is diluting this thing, taking away collision, giving the powers to the jurisdiction officer, and the fast movement, and taking the discretion away. That's the most important thing. So subjectivity is over. So it's a remarkable.
Thank you, Mr. Rakesh Nangia, for your closing comment. I'll go across to Mr. Anil Harish from DM Harish and Company for his closing comment.
An English judge, Lord Sumner, said many, many years ago, the way of taxpayers is hard, and the legislature does not go out of its way to make it easier. Fortunately, this time the legislature has not done that, but the CBDT has done that. So we're very glad that this has been a positive move, that it is more granular, as Mr. Ravi said, that it is very precise. I wish it could go even further in that all these restrictions should be removed, because if our objective is to make things actually easier, then we must do away with most of these prosecutions which just come out of a technical violation. So I think it's a good thing, but I do feel that more should be done. However, we are grateful that this has happened.
Thank you. Thanks for all these inputs and suggestions also. And we would like to also thank the CBDT chairman, Nitin Gupta, that in his tenure, changes have started happening. And we'll track this journey as he takes decisions in his tenure. And it is important that people are also made aware of these decisions and the impact that they have on their lives, the business community at large, so that this country remains a favored destination for investments. And the tax department has a very important role in ensuring that this country remains a favored destination for investments. And that is why we continue to track the CBDT on these issues. And I would really appreciate that S. Ravi, founder Ravi Rajan and company, Rakesh Nangia, chairman Nangia Anderson, and advocate Anil Harish, partner DM Aration Company, made time and shared at a short notice, appeared for this show. And thank you so much, viewers, for tuning in for this show. Thank you so very much.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.